Hello everyone, this is Juan Sarmiento and today is Friday, December the 16th. Let's get started by checking our positions and see if anything needs to be changed. Okay, I have them organized alphabetically. I need to make sure that I have this yellow icon here. You can select it that way, and in the Analyze tab there must be the same icon so that when you click anywhere here it will switch. So let's start with Caterpillar, and as you can see I have January expiration. There's plenty of time for this to work. Even if it's not working, it may have already worked. Let's go to Caterpillar here, and you can see that up to date it says P&L positive. Okay, so it may be that we have already two trades on it, the original trade plus a rollover. To see that, make sure you have, let's say, 130 days or something like that. I don't know, it depends on how long you've been owning that position. And it says here we have 3 orders filled. So we have the original trade, a rollover on the call side, and an additional put. You remember that when you are very close to the expiration, the put might be out of the money. We don't need to close it. I just add the put. Okay, so let's see, in December 9th or thereabouts, we may have done the rollover on the call side because the call side was in the money, the call short, but the put side was not. So I could just add very close to expiration. On the day of expiration, you can just add the put and leave the expiring put to expire worthless. Okay, so we can do this Analyze trade. Okay, and same with the other two. Analyze trade, the other two trades, and Analyze trade. Then you hide the position, and this is what we have, and that's our profit or loss depending on what it is. It's got a funny shape on it, but nevertheless it's a bullish, we are in a bullish situation. Delta usually must be a small delta, okay, and you should adjust, and then not negative, because if the stock goes down, volatility will pick up, you make Vega gains. If the stock goes up, you make money with the deltas rather than the Vegas. The Vegas tend to decrease when you go up, so it's better to have them a little delta positive. Okay, so this Caterpillar is working fine. I don't need to change anything. Let's go to Cisco. And let's say show all. And here in this case, well, January expiration, we don't need to change anything. Let's go to the Monitor tab, and you can see that we have the original trade plus a rollover. Again, to copy that into the Analyze tab, press click and Analyze trade, and then the rollover, same thing. You go click on the Monitor, go to the activity and positions, no, account statement, and then click on this other trade, Analyze trade, and then hide the position, and this is what we have. So far a loser of $674.91. So we're going to give it a chance to the January expiration. If this is a loser by then we are going to close. Okay, so for now I'll let it be. Okay, if this goes over the, what I call the smiley face, the stock goes over on the upside, I might sell some of the calls. But as for now, we don't do anything. Let's go to Gilead. Okay, Gilead, obviously, I took some profits by selling calls. You see, you have 16 puts, 13 calls. That means we reduced the number of calls. And I also even sold some. You can do either one. Sell the long calls or add short calls. Okay, the purpose is to balance your deltas. It's now negative. So how do we balance it up again? Well, you can sell puts here. Let's take a look at a chart of Gilead, and it's going down big time. Okay, this is the stochastic is pointing down. This TTM squeeze is also pointing down. The volatility is increasing. It looks like the stock will continue to go down, but we could take profits as we go. either by selling puts, the long-term puts, or adding shorts. I think I would like to add shorts. Analyze closing, you say just analyze closing to show this, and then change it to a sell. Okay, sell 1 or 2, that reduces my deltas, not by much. How about 3? Okay, that's 40. I like to leave it at that in case it goes up again. Okay, and that's 23 cents. That's not a whole lot. Okay, so what about if we sell the long term? Because I'm not getting more from the selling shorts. Okay, if it was bigger than the number, perhaps. But if we sell 1 of the February 80 calls, that's $1.48. Let's just sell 1 and yeah, or 2. Yeah, and my negatives, yeah, I like to do that. Even if I am bearish on this stock, we don't know if it's going to go down, and then next time we meet it's back up again. Okay, because we are trading once a week, we have to neutralize it when we get the chance. And minus 28 is not neutral, but it's close. It's close to neutral, and I have the negative bias, but if the stock goes up to 95, we'll be fine. Okay, so that's how you adjust. February for the longs and January for the shorts. And as you go, you adjust until you finally say, okay, I'm done with this, let's get out of it. Okay, but in the meantime, you collect your profits and reduce your exposure. If you go to the monitor tab and click on the trade, in this case, Gilead, let's look for Gilead right here, and you see year to date, $546. And the current value is $7,383. Okay, so that's below my $10,000 limit, which is 10% of my account. Okay, that looks good. Let's go to GS. A quick look at the chart. Oh yes, been declining very strongly. Volatility is picking up. So let's go to the Analyze tab. And here we are at the middle, in the middle of the cone here. And today a little bit of a loss, but so far it's been doing great. Okay, so let's go to the monitor tab. Again, we'll see how many trades we've done here. This is the original plus an adjustment or two. Okay, we have done some other trades on this stock, but we are going to ignore that. Let's just focus on our current trade, which is this plus the adjustments I have made. I made a call adjustment, then a put adjustment, meaning I added puts. You can see that I added the January. The December 9 would have expired worthless because the stock was higher than 350. And in the end, I bought back a December put for 1 penny. Obviously, that was last week. Just for demonstration purposes, I showed you how you could close that on the day of expiration instead of letting the chance that within hours it would go below the 350, which obviously could have happened. You know, look at this. You can be at 370 and suddenly it's below in 3 days. So it can happen. Okay, so let's hide the current position, and this is what it looks like. Okay, let's go analyze, hide the simulations. This is our current position, really, after all the adjustments. Okay. All right, this is the position as we have it right now, and I don't really think I need to change anything. It's right at the cone here. The expiration is January. I'm going to let it be. Let's go to LMT. And this one is right in the middle. Sometimes this is what happens. It's right in the middle. It means if it stays there to expiration, you get what is called theta gains for the time to expiration. And as you can see here, we already bought the original plus some adjustments later on. So I rolled over from November 25 to December 23rd. And you can see that I did the same thing. Instead of doing a rollover, a complete rollover, I did it in two parts. First the call, and then for the put, which was near expiration, I simply roll it over. So let's go and analyze that. Analyze that. And analyze that. Okay, so I'm simply copying and hide the simulation, hide the position, and this gives me, it's sort of acting weird. It's not giving me what I would have expected. It's giving me this strange thing here. But you can see that is the P&L is 167. And that's negative 167. So that's what that looks like. This expired December the 23rd, and that's a week from now. Okay, so because we are in the center, by the time next week comes, we might lose if it goes strongly in either direction. Okay, so I'm going to do my rollover. How do I do a rollover when we are so close to the middle, to the expirations, to the strike price? Well, you need to roll over both calls and puts. So you select both, and then you say analyze rolling, and you select double diagonal, then show that. Let's move that off. I can deselect those, and this is what it would look like. I would get $3.75 credit, okay, times 100 is $375 reduction in my cost, essentially. And that is if you were moving from December the 23rd to December the 30th. That's just 1 week. Well, you would be doing that forever. I usually just roll over to the next month, which will be January the 20th. January the 20th. And that gives me a whole lot more, $13.85, which amount to $1,385, just to roll it over 1 month. Well, yeah, I would like to do that. Why? Well, look at my my cost here. If you select the LMT here, go to the end where it says market value, that's my money that I have invested in this trade, and the maximum I can lose, $8,145 if I were to lose everything, which I'm not. That never happened. So doing my rollover reduces it by 1,000. So let's do that. Confirm and send. And it should roll over. You see how it opened the January 20th? It's going to close this December 23rd and open the shorts for January the 20th. We'll let that sit there for a little, and if as we go in this session it doesn't seem to like it's going to fit, I will adjust my cost, my ask price. Let's go to Starbucks while we wait. Okay, here's where we are, right at the top of the cone here, and we have December 23rd. Again, it's 1 week to expiration. It's very close to the cone here. Let's go to the monitor tab, and we see that, yeah, that's the original. There is no adjustment. So what the original trade is what you see here. That's the original trade. It's exactly the same. You can copy it if you want. Analyze trade. And how do you know? Well, look at the P&L here. $227 loss. Okay, if I hide the position and just put the simulation, which we just copied, is about the same. It's exactly the same P&L. That's how you know. And then you can tell, well, how much money do I have in this trade? Look at the SPUX, and it's $10,697. Okay, so we can let it sit here. We can do the rollover. And what I would do is, well, we are losing here. Is a loser. Well, better to close it and take our loss. This will be the moment to take our loss. Okay. However, because it's relatively small loss, I could say, hey, wait a minute, I'm making money here today. Perhaps by the end of the day I will be positive. Oh well, perhaps not. Okay. Let's do the rollover because we are close to the stock. I'm going to do a rollover as well. I'm giving myself some additional time because the loss is minimal. And again, we're going to go to not to December the 30th, but to January the 20th. And that gives me $328 credit. Okay, you can see that it becomes delta positive. And it's right now declining. So if you have the time to wait here, you can wait until the end of the day before you do the rollover. Perhaps if you have the time and to check it on Monday, you wait until Monday to do the rollover. We don't have that luxury. We do this trading once a week. And to be honest, I don't want to waste any more time than that. Okay, so do my trade right now, right here, right now, with a $222 loss. I'm willing to do that, call it a minimal loss. Or you say, I'm sick and tired of this, I get out. You can do that too. Okay, I'm going to simply do the rollover and get a credit of $1,640. Simply because we have so many, and that got filled. Okay, so you can copy this right now, and you make the adjustment. Here, it should be easy to make the adjustment. We simply copy it now, analyze trade, change the date of the shorts to January the 20th. And change the number, the debit here. How? Well, subtract this number from this number. So, calculator. Here we have the original cost was $21.79, and we just added a credit minus $3.29. That's the cost, $18.50, and that's my current cost, 18.5. And you would see that the P&L of the original 232 will be the same as the new trade we have created. Yes, 231, all right? So close the other two, and you can keep this as your current trade. It's a way to know if you are, how much money you're losing, for sure, without having to go back to this and copy all that and do the calculation. You do it right now, right when you are doing the rollover, by subtracting this rollover credit from the debit of the original trade, and that gives you the cost. And the cost of the new trade, you simply adjust the dates of the expiration, and they match. If you say analyze opposite and deselect the simulated trade, you say show all, it creates a straight line because I'm using this portion in red to close, and you can place that order right now, close the existing trade with this order, which is the invert of the current trade as we have it. Okay, and I'm gonna keep this there. Hopefully we'll remember next time not to delete it, but that's the way it would look like. Okay, now let's go enter a trade I've been looking at, which is Adobe. The curious thing is that the volatility has really dropped on it. So let's copy this trade, okay? Copy that, and I'm gonna paste it here, and then analyze. And I'm gonna discuss it a little further, okay? You can, right now it increased to 40 plus. That's too bad, because then that eliminates it from my possibility. It just went up 40%. Let's take a look at the chart. look at the volatility. It's dropped after earnings significantly, quite a lot actually, and it's near the bottom of the range. Okay, you can wait a little, but the earnings were better than expected. You can see I put that in my spreadsheet here. Expected minus actual, the difference is 0.82, which is 29% of the expected. So I beat expectations by 20, almost 30%. That's a trade. That makes my trade is more than 10%, so I trade it. Okay, it's actually 30%, that's pretty good. Then I enter the volatility. Where do I get this volatility? It's from the trade that you are proposing here. You select these numbers here, the back month options and the front month options. I put it here when I started this. It was pretty good, but now it's going over 40 for some reason. On the call side, it went up significantly. I don't want, if it's over 40, that's a no. Okay? Let me reset this. Reset slices. Okay, it's trading at 343. Let's take a look at the chart. Yeah, it's been going down since, so the volatility is picking up a little bit. Let's go to 340 instead of 350. Okay, because it's closer to 340. Okay, let's change that. 340, 340, 340, and 340. Well, as you can see, the volatility is still over 40 for the back month option. That means it's too expensive and it could fall and it could hurt us. So I'm going to pass after all. Too bad. I was looking forward to showing you that. All right. That's just too bad. We can add it to, I have a list of possible trades, candidates, and forget it. All of these are no-nos. You see 10% for the day, 10%. None of them. I can put ADBE, and that's slightly positive. The last, no, it's not that good. Okay, so forget it. I'm not going to enter it. Well, this is the holiday season, so until January, we're not going to see much activity. I still will make the seminar, but you'll see that you're not going to find any new trades. You may not even have much winners or losers. We have plenty of trades on the go right now, and we will have to see, wait until January to see things develop better. Okay. That's all for today. Let me go to the monitor tab. I think I have still a trade here. Yeah. You can see that my ask is lower than the mark. So cancel, replace. If you do that, look at the range here, the natural and the mid. That means it's very low liquidity. So it's a big spread, and then it becomes hard to get it filled. So I would check it out a little later and adjust. Okay, for now I could just reduce it by 5. That's not going to do much, I'm afraid. And I adjusted that 1380. We'll see what happens. Okay, let's go to the trade tab and see what the market is doing. Yeah, it's falling fairly quickly. All right, let's call it a day here. Thank you very much for joining me, and see you next time. Bye-bye.